All right, guys, we're going to move on to the income statement. And this is where you can look at the year by year, the revenue and the money on the bottom line that they're making. We started out with $260 million in 2018 to $1.5 billion in the 2022 calendar year. The only thing I don't like about Google Finance is, like, I wish they were a little bit better about updating their stuff more quickly, like as earnings came out. So they don't have last quarters where we became profitable, but this is the quarterly income statement, and every quarter a little bit more money, a little bit more money. And this was like an impairment charge, I think, that had to do with Galileo or something like that. I'm not 100% sure on that. It's clear, guys, we're making more money on the top line and we're losing less money on the bottom line quarter after quarter. And this was that one-time charge. And then the next quarter, the one that just announced, we are now a profitable company. SoFi is profitable. So you guys are doing what you're supposed to be doing. You're investing in a company that's growing on the top line and the bottom line. And you can throw a million statistics, you can throw a million graphs, but at the end of the day, this is the only thing that matters, is that we're growing on the top line and growing on the bottom line. And soon, we're going to be making more and more and more money. And the more money we have, the more chance of SoFi buy back shares. And we get a better chance of institutional investors dumping money into SoFi. Now, real quick, I want to bring you over to Simply Wall Street. It's a great website. I love that they give you information on these stocks for free. You get like 5 or something like that a month where you can look into everything on the stock. I love looking at ownership breakdown. And I think that's another reason why we're seeing this crazy ass volatility, is because the way the ownership breakdown is. The general public owns 53% of the shares, which is a lot. You always want to see your stocks with institutions owning the majority of your company, right? So retail gets scared out of money. They're like playing these crazy options. They're manipulating the stock without even really knowing what they're doing, right? So in this case, with 50% of the ownership by the general public, we're going to see these swings until it flips, where institutions own more of SoFi than the general public. We're going to continue to see crazy volatility. But as this company matures, we're going to see less and less volatility. And I look in the next year, year and a half, especially when that S&P 500 inclusion starts to inch closer and closer, we're going to see this institutional ownership go over 40% and hit that 50 and 60% range. All right, I want to compare SoFi to Ally Bank institutional ownership-wise. So if you look at Ally Bank, it's a company that, you know, SoFi can kind of mirror what Ally's doing. I like Ally. I think they're a really good company. I think SoFi could be an Ally Bank, but even better and bigger of a company and a bigger market cap. But look, obviously Ally Bank has been around a lot longer than SoFi has as a company. But look, institutions own 80% of Ally Bank and the general public only owns 9%. I don't think it'll ever be that skewed for SoFi for a really long time, like 10, 15 years down the road. But over time, we're going to see institutions pile in to stocks like SoFi that are currently profitable and will maintain profitability over the calendar year, and we can get that S&P 500 inclusion. So if you have any questions about SoFi, send me some messages in the comments below. I'll be glad to answer any questions you guys have. I hope this video helped. Thanks again, guys. Don't forget to like and subscribe. We appreciate you guys. Peace.